Hey everybody, welcome back for another episode of Bitcoin Technical Analysis with me, your host, Rocky Outcrop. In today's video, we're going to be looking at the Bitcoin prices over the last 24 hours and where they might go over the weekend, of course. And we're going to be entering that great debate. Does size matter? And is close enough close enough? Let's roll the credits, get on with it. Come on, let's dive in. So of course I say roll the credits, but that's probably roll the intro, I don't know, but I'm learning as we go along here. But look at my new skill that I have. I'm a weatherman type person. Look at that, look, I can point at the charts as I'm in them. Look at this, right? That's the spot price, this is Bitstamp, and look at where the 200 simple is, and look at where the price got to. That's really damn close, right? That's really damn close. And look at that candle there. Today's candle, that's a bullish engulfing candle, okay? Look, that's two very interesting things. We'll be discussing that and more in this video here. And let me just move myself out of the way. And I hope that this stuff on the screen goes away so that it doesn't always have the recording thing coming up. But I can't help it. If it's there, okay? And I'm going to just try and move through this. I can actually see how long the video's been going for, and that's probably a good thing, okay? So here we are in the charts. That's the Bitstamp chart. That's Bitcoin versus US dollar 24-hour Bitstamp chart, okay? And what have we got to discuss? Well, there's a few things here. We're looking at the price of Bitcoin on the daily, discussing whether or not this candle here is actually a satisfactory size or if it's just not big enough. And we're talking about whether or not this is close enough is close enough. Now, what I mean by close enough is, does this constitute coming up here, giving this a test, in which case you would probably be rejected on the first pass, then you could come down and expect to sit in a higher low, somewhere in and around this area, before trying on again, okay, that's option A. Or option B is that this wasn't quite close enough and maybe we're going to try it again, right? I'm leaning towards option A on that one. Now, that slightly negates the other thing. Now, is the first part of the debate, does size matter? Well, this here is a bullish engulfing candle. And does that matter? Because bullish engulfing candles normally, you know, it's a positive thing and that you could see something going on again. Well, it's really up to you. Now, I'm going to draw out the different arguments in the different aspects of technical analysis. I don't give tips, so it's on you to choose your prices, although for entries and exits. Although I do have to say that yesterday and for the last few days, really, if you've been following along, then we've been doing really pretty damn well. So let's hope that we can keep that going. Can't go forever, but that's what stop losses are for. Okay, so it's up to you to decide if this bullish engulfing candle here is big enough, yet that's not close enough. Then you could say, hey, maybe we'll try it again tomorrow. And the inverse is true. If it doesn't really matter, size doesn't matter, and that is close enough, well then maybe we'll see some sort of, we'll not see the continuation that you might get after a bullish engulfing candle, okay? This is the 24-hour chart, like I said, and if we were to come in and try and set in a higher low, what are our targets for that? And a higher low would be a great place to get along if we were to come up again. Also, if you're managing your risk in and around these areas for shorts, well then this would be your sort of profit-taking areas. And what we're looking at, well, we have a horizontal resistance here. It's very faint, especially on the MacBook here. But that's at 8,500, and we can see these wicks came down here. Pardon me. Would that constitute a higher low? Well, it would be pretty hard to draw that in there. Maybe if it came down a bit below and up and around, and it was in and around this area, you could say it looks like a higher low. But if it comes down here, then really you're just ranging in this area, and that's not a higher low or a higher high. In fact, it means that this isn't really a higher high here either. We're just in this phase flagging out after having had a move up. So we could still be in a pennant here. So that's also worth bearing in mind. Now, let's just take a look. I'll try and move myself out of the way again here so I can see the oscillators. Sorry about this. Right, now, so let's take a look at the other charts, right? So if this is Bitstamp, did we get, and we're talking about close enough is close enough and whatnot, then let's take a look at the other exchanges. What have we got here? We have Bitcoin Euro, Coinbase, that's pretty close. Bitcoin Tether on Binance, well, there's no debate there, that's definitely touching. US dollar on Coinbase versus Bitcoin, well, that's very close there as well. It's not quite touching, but it's very close. What's that? Bitfinex's prices are always a little bit kind of funny, but it's not quite there. It's not quite there. That's not quite there. And back to the CMEs again, okay, where we can see that we're actually living above the 200 simple. So, interesting stuff there. what can we see on the oscillators down below? Well, of course, we have this aspect of the daily chart. Now, I've covered this a lot already, but if the prices don't break up above 9,500 and stay there for more than a day, we will have fairly significant bearish divergence showing up, classic bearish divergence showing up on the chart on the daily time frame. And of course, you'd also be getting rejected from where would be a big resistance point on the monthly and weekly charts. And it would also maintain us within the macro downward trend if that were to happen alongside the bearish divergence. So you would be looking at least a retracement back down to, I would have imagined, in and around one of these areas, depending on how long it takes for us to get there, because we are also coming across fairly significant supports and resistance along the way. For instance, right now, where we are as well is indeed an area of resistance. If we just follow the price along, we can see, or support potentially in the past, that these wicks came down quite close to where we are here now. And we're bumping up against that from the other side. So there's a degree of support and resistance in and around this area. Resistance for us currently, support in the past. So, and then again, resistance again. So here we are, and this is this price here from around about the 13th, 14th of November is where we're experiencing this resistance at the minute. And of course, we see that back there in the 11th of October as well. So we are here, so you can see there's resistance along the way. Let's take a look down at the lower time frames, and I think that'll pretty much do us for the video because there's a few interesting things to point out here. This is somewhat divergent. Look here, high and low and high and higher. Therefore, bearish divergence. That is across the board. In fact, it goes even further back. You can take it back from here where you've got 1, 2, 3 points of it. That's the 4 hour. Indeed, on the hourly chart, you can see the exact same thing on the go. As we've been trending up, the oscillators below have been trending down. You can see that quite clearly here. Whoop, down and whoop, up. Okay, sound effects are not necessary, but they're there to add pleasure. So if we look over here between these 2 points, you can see that on the MACD as well, and on the stochastics and the RSI. So we have a lot of bearish divergence showing up on the charts. Is that giving us some warning signs? I certainly say that it is. There's warning signs all over. And on the 15-minute chart, well, the 15-minute chart has actually not continued to trend up all throughout the day, as you would have probably expected, because we did come up and get very close to the 200. Simple. Either we were going to go up there and properly touch it, or we were going to come back down from somewhere else. It touched it on Binance. We're above it on the CMEs. Do you need to go across the board, across all exchanges? Well, of course you do not. So here we have a trend down the way, which is echoed down below, which is convergent with each other. So there is no, so that could be considered to be fairly neutral. If this was a downward trend on the 15-minute chart, and you were to look at this, there are not a lot of bottoms to really compare. Tops to compare on this, but between this point and this point, here is higher. So it's higher, so that would be hidden bearish divergence there, which would signal a continuation of the trend. Okay, so that more or less wraps us up. It's up to you to decide what matters most. Is close enough, or does size really matter? And is this a bullish engulfing candle? And I suppose there's a couple of little things that we can look at over the last wee while to point things out. On the 50-minute chart here at 8 o'clock, we got a big beefy candle, which was interesting enough on the volume side of things, but indeed the volume has been tapering off today. In fact, if you look at it over the longer term, it's been tapering off actually since way back when. So as the price has been going up, the volume's been going down, and that coincides quite nicely with the VPVR over there on the right, showing you that there is a drop-off in trading activity in and around these prices. If you bear with me, because my MacBook is somewhat slower than my PC at home. Okay, so here we go, and we can see that the VPVR tapers off here, and that would coincide with what you would expect to see there. So that's that. And on the 12-hour chart, if we just take another look, where are we in comparison to our moving averages, and we can take a look at some more moving averages, and then we can wrap up. So we have the 10 simple here between us and this channel, for instance, and between us and potential support. The previous high before was 8424, so you could look there for your first port of call. Of course, there's the much more obvious level of around the 8,225 area. And then you've got these two moving averages here, which are in between us and them. So those are areas to look out for if there were a downside. Of course, on the upside, the targets remain exactly the same as before. We have the 9,298 area and the 9,500 area. In between times, we're in no man's land. And I've just used no man's land as being like that area in the First World War where you get shot at from either side, where you really do not want to be. And that's where we are currently. We're currently in an area of technically no man's land. We're quite close to this, but we are below it. And the next area of support down below is probably down towards this 8,493 area. The question then to you guys is, do the oscillators need to reset for us to get more upside? We haven't actually broken into the oversold area, and we would really be needing to do that if we wanted to actually achieve higher prices and negate any possible bearish divergence. See here on the 4-hour chart, for instance, as we trend upwards and we trend downwards here, we're putting in potential bearish divergence. Well, there's some there already, and we're currently forming some more. So what would we want to see happening? Well, we'd want to get higher on the RSI than the previous prices, okay? And being higher on the RSI would involve us being in the oversold zone. Oversimplifying and overcomplicating things leads to people getting confused about things like the oversold zone. You can see there that if things are oversold, then people would expect the price to pull back. And people say, oh, or overbought. You choose your terminology. It makes no difference to me because I hate both of them. Now, if the price goes up into that area, of course you would expect a bit of a retracement from there because it is in a very extreme area. Of course it is. But that is far, far, far more positive than having bearish divergence showing up and doing nothing about it, okay? So don't get too blinkered by these ideas and the words. Don't let the taxonomy of trading distract you too much. Please, as well, bear in mind that the taxonomy of trading was not invented by people who were all classically educated in the ancient Greeks and knew the etymology of every word that they used up to that point. No, the vast majority of the taxonomy in trading has come from people who are on the floor making up the words themselves, Americans, and of course academics who are involved in trading and don't necessarily even have skin in the game. So taxonomy, not important. Reality, important. Can we get up above this area? We'd want to, at least to avoid the potential divergence, right? Okay, and do we have anything to be said about these sorts of areas on that time frame? Well, not particularly. We can see that we are in this neutral zone on the 15 minutes, and that's represented fairly well by the fact that we have been more or less consolidating in here. So these oscillators are getting a good chance to get a bit of a breather. We can see the stochastics is there coming down towards the midpoint. I pointed out in yesterday's video that the stochastic indicator was coming down towards the midpoint and could easily be picked up there as it has been so often before in and around the midpoint. And I'm actually struggling to find that right now on what chart it was. Maybe somebody could remind me. It may have been the 1-hour chart that I was looking at the time. And what happened? Well, it turned around. Actually, no, it would have been about yesterday. So let me just see if I can find it real quick. If not, then we can ditch it. Whatever. It's probably this 4-hour chart. Came down here and says, what was that time yesterday? Don't know. Honestly, I don't know, but the fact is that we didn't come down in the stochastics down past this neutral zone, okay? Tune into yesterday's video again if you wanted to see that. It's besides the point now, that's yesterday's information, okay? So anyway, that's the current situation. Is close enough, close enough? Does size matter? It's kind of on you to decide. There is, of course, potential bearish divergences showing up, but then again, we did just come up and get really close to a major point in the market, and you would expect to have the prices pull back somewhat from there. It's all happening around a lot of different things all at once. You've got the VPVR thing. I was using this metaphor of the scared teenage boy asking out a girl and being too scared, so he just wets himself and runs away. And you have elements of that on the go here in our chart at the minute. So it's hard to say where it's going. Now, the BTC chart, just to sum up, the last minute before I tune off is we're at the weekend now. There's less volume. Less volume can lead to higher volatility. Higher volatility would be seen in things like $500 ranges and things like that. We could even experience the volatility over the weekend, which would help the oscillators to get some level of being reset. We could come down around about this, around about the 10 simple, for instance, very easily, or even the wick of that candle there in around the 8,500 area, and then back up again during the weekend and create no gaps on the CMEs. But if we were to open up Monday for this CME time, we'll say Sunday UK around about 11 p.m. or so, off the top of my head, I'm not 100% sure. Then if the spot prices were in the 9,100, 9,200 area, you'd have a gap. Spot prices would be above the prices on CMEs, which means the gap would be below you. And normally speaking, these gaps get filled. Even this gap I mentioned last week, which was a non-gap gap, was indeed filled. Look at this one. That was a historic example right there. And of course, the prices that brought us down to 8,000 area in the first place was all off the back of a CME gap. So CME gaps are important. If we were to create one and the price is going up, then you could expect the prices probably to retrace back down and test off this 200 simple. If the gap is down below and the CMEs have to open up down here towards this 10 simple moving average on the Monday, then you would potentially have a gap up here towards where the area is where the 200 simple might straddle the middle of that gap, which would be incredibly interesting for coming back up with a little bit more momentum for potentially breaking it and living above it on the spot prices too, because the CMEs have already done quite a good job at that in the meantime. Thanks very much for tuning in. I really appreciate it. Any likes, comments, subscribes, really appreciate it. I really love my background here. I don't think it could be improved in any way. I do have a green screen and I might spoil this effect by making it, I don't know, invisible or something tomorrow. But let me know if you think there's something I could do to make it better. Maybe I could put something distracting in here like a Burger King cup. I think, okay, that's perfect. Thanks for tuning in. I'll see you next time.